So, welcome back to this course. Now, let me just give you a quick discussion about personal and additional exemptions for individuals. So, under the previous law, we have the so called personal and additional exemptions. However, on the implementation of the tax reform for acceleration and inclusion law, or the so called TRAIN law, both personal exemptions and additional exemptions are now repealed. So this is to offset the increasing of the tax exemption or the level of exempted income. So back then, taxes would start at around 30,000 pesos, but now it was increased to 250,000. Let me illustrate that one. So these are also all additional deductions have been repealed by the TRAIN law. And here is the income tax table before the implementation of the TRAIN law. And if you notice, taxes starts at 5% for taxable income of around 10,000 pesos. However, because of the TRAIN law, this income tax table has been significantly revised, and they removed all personal and additional exemptions and deductions. It's because they increased the non-taxable or the tax-exempt income to 250,000 pesos. All right? So if you will see the difference, let me just show that once again. So 250,000 supposedly income is already subject to around 25% income tax. However, it is now tax exempt. So this was the time where a lot of employees have started enjoying more take-home pay because of that increase in the tax-exempt income. And you will notice that the tax rate has also been revised. Back then, it started at 5%. Now, it started at 20%. But any amount lower than 250,000 annual income will be tax exempt. Now, comparing the income tax rate for corporations, the income tax rate for corporation has two types. You have the normal, regular corporate tax rate, which is 30% of net taxable income. And you have the MCIT, or the minimum corporate income tax of 2% of gross income. Now, for most corporations, the normal tax rate will apply. However, for corporations who are already on their fourth year, whenever they report a zero or negative taxable income, or whenever the amount of minimum corporate income tax rate is higher or greater than the normal income tax due, then the minimum corporate income tax will prevail or shall be applied, again, which is 2% of gross income. The logic behind here is that you were given 3 years to operate, and if you're still reporting at a loss, then you might as well rethink operating, or there might be you might be doing something fishy for not reporting a profit even after 3 years of operations. So the MCIT will only apply under two instances. First, when you have, as a corporation, you have reported zero or negative taxable income, or when your normal income tax rate is lower than your the computed minimum corporate income tax. So starting the fourth year, you have to compare your MCIT from your normal income tax rate. All right, then. I hope that suffices our discussions. A quick overview of the personal exemptions and tax rates. See you in the next video.